Here we have the current stock market analysis for Gamestop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, share prices are continuing to pressure the top side. If we sort of move in here a bit, what we're looking at here is a 45-minute price chart. So each candle on this price chart represents a 45-minute trading period. And as we can see here, share prices have made a fairly strong bounce, at least a near-term bounce off of this $19.43 level. Currently, what we're dealing with is an upside resistance zone that is forming right around 2271, I should say. Let me just write that in here, 2271. So, here we can see that this is the main, upside resistance area that we're currently running into. And we have now pressured this area on two separate occasions. So you can see this first occurring during the September 24 trading session, early in the trading session. And then more recently, you can see this happening again. So, what we're looking at here, is a bit of a double top resistance zone, and the movements to the downside have occurred at very interesting levels. So we're going to be looking at some of the support zones here in this video, and I'll be explaining exactly why these are important. So as I said, to the top side, this main level is 2271, but to the downside, I actually find this price movement here to be a bit more interesting because, even if you're from the bullish perspective here, these declines into roughly 2154, I should also write that here, have occurred at some very important Fibonacci retracement zones. And as you can see here, we did actually bounce off of this area quite sharply and even post a bit of a new high here. This prior price high, this is not exactly a double top. This prior price high came in at 2266, and now this more near-term resistance zone started to develop at 2271. So you do actually have a bit of a higher high here, which is more of a bullish type of structure. And then in addition to that, what we can see here is that this price movement to the downside did find support right at 2154. So why is that level significant? Well, two reasons mainly. One would be the fact that this is the 38.2% Fibonacci retracement of this ascending move higher. This most recent rally going from roughly 1943 to 2271. As we can see here, this upward bullish price movement here, the 38.2% Fibonacci retracement of that price wave, trend wave, does come in right around this area, right around 2146. So we didn't exactly reach that area, but where we did reach was this sort of flatlining blue line here, which is the 200 period exponential moving average. So what you'll probably notice at this point is that these two areas are really coming into direct contact with one another. So essentially, you have this flatlining blue line here. Previously, it was declining. Now it's more of a flat line. And then you also have the bottom of this orange zone here, which is the 38.2% Fibonacci retracement zone. So the fact that you were able to see a price action turn around here is significant because as that happened, you did actually post a marginal new high, not an extreme new high, but we didn't fail exactly at the prior resistance level of 2266. So when you combine these two factors here, you do have some positive developments, which suggest that share prices have the potential to continue moving higher. So if we look at the indicator reading here, we're also looking for additional evidence that this may or may not be true. We don't want to just side with one side of the argument here. We don't want to just kind of blind ourselves with a bullish argument. So really what you should be doing as a trader is looking for situations where you might be wrong about your assessment. So we'll look at additional areas here and look at the indicator reading. But as we can see here, this is actually a bullish trend movement here. And this does suggest that share prices are being supported by positive momentum. This on the bottom of the price chart, this purple line is the relative strength index. And as we can see, this uptrend line here has been tested on 3 separate occasions. We did actually get a fairly small break to the downside. I would consider this to be a false breakout to the downside because, we did see some upward price movements from there. Stock markets were trading in oversold territory at that point. We did see a bit of a bounce, and then a retest of this trend line from the top side. So since we were able to find support here and move higher, I would be comfortable calling this a false breakout to the downside. And I would then say that this is an upward trend line here that has been tested on 3 separate occasions. So this is still valid at the moment. And what this does tell us is that share prices are currently being supported by positive bullish trend momentum. Now, that doesn't mean that it's going to last forever necessarily, but this is really present on more than one time frame. If we were to pull out on the longer term price charts here, we would see that there's another trend wave here that's showing in the positive direction. So, even if we start to see share prices move lower here, you will have sort of 2 different trends here, 2 different positive bullish trend momentum indications, which suggests that share prices could continue to be supported, at least above this $20 handle. So for the most part, for recently, as far as we're concerned, these are relatively strong developments. Now, does this mean that we're going to see a short squeeze somewhat soon? I don't see any reason to believe that that's necessarily true near term, but this outcome here is certainly better than trading at the $15 level or something like that. One other final point here that I will point out is that the prior uptrend, upside price movement that we have been seeing here had recently been confirmed by surges in trading volumes, as well as we can see on the bottom of this price chart. These green and red bars here. That positive momentum activity has started to slow down here, and we have actually seen instances where negative trading volumes, selling pressure has started to overcome these positive movements. So that's a bit of a concern here, because we are pressuring the top side here, and that is a positive development. We're also seeing positive readings in the indicator, the momentum indicator, which is all good and everything. But one area that I would point to as a potential risk is the fact that trading volumes now are starting to decline. So these upward price movements are not really being confirmed by the trading volumes themselves, and this is one factor that could put this near term rally that we're seeing at risk. To the top side, if we do break above 2270, I would start to then look at 2320 as the next potential level of resistance. So here's the current stock market analysis for Gamestop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.